All right, good morning. Can only hear music. Good morning, Waylon. Thanks for joining in. Um, yep. All right, I got it now. Sorry about that. Okay, so here's what we got going on. In the bottom of your screen, we've got the S&P 500 minis. Those are opening. Those are set to open up down in about 20 minutes, down 21 points. In the bottom, I've got the Nasdaq futures, which are currently trading. So these are both live on the bottom of the screen. Those are down 62.75, and the Dow is down 163 with 20 minutes to go until the market opens. So we had a lot of news over the weekend, and we'll get into that. But first, let's hit the economic calendar. The economic calendar for the week, short week, by the way. We'll go into that in a second. Um, so on at 11 a.m., the federal governor Chris Waller speaks. Don't know what that's about. That's it for news for today. Tomorrow we have National Home Price Index. Another Fed Vice Chair speaks. Randall Quarles speaks. Consumer Confidence Index, and the New York Fed President speaks. So a lot of Fed stuff going on this week. On Wednesday, March 31st, we got the Chicago PMI, ADP Employment Report, and Pending Home Sales Index. That'll be on Wednesday. Thursday, it's going to be the only bigger day of the week, but there's a lot more happening because that's April 1st, and I'll talk about that as well. And we've got basically 19 minutes to get it done. All right, so 8:30, these are all Eastern time. Initial jobless claims through the states, continuing jobless claims, ISM construction spending, another Philadelphia Fed. Boy, the Fed is speaking every day this week somewhere. Friday, April 2nd, markets are closed. The bond market is open for half a day, but the stock markets are closed for Easter weekend for Good Friday. So on Friday, though, we still get non-farm payrolls, unemployment rate, average hourly earnings, and another Fed president speaking. So there's going to be a lot going on this week. It's a short week. We talked about last week where we have the capital reserve requirements of the Fed for the major banks changes. They've been on a waiver since April of last year, and that is expiring on Wednesday. So the capital reserve requirements they had before the pandemic start are now back in place as of April 1st. You're also going to have a lot of volatility this week because it's the end of the quarter. So you have a lot of funds that are going to be rebalancing: index funds, bond funds, stock and bond funds, funds in your 401ks. So there's going to be a lot of balancing. The talk on the street is that basically the balancing is going to roll less than the stocks, and that could cause some down things. But the biggest thing that happened over the weekend, the news came out. Why did we crash on Friday? And the main reason why is Goldman Sachs, along with Morgan Stanley and others, basically sold off billions and billions and billions of stock. So here's let's see if the Reuters one opens up here. All right, here we go. All right, so let's make this bigger. All right, so remember we had that huge dump on Friday. So a number of large block trades on Friday, which investors said caused big drops in stocks of clutch companies, has raised speculation about what was behind them, with Goldman Sachs said to be a bank involved in the sales. Shares in Viacom and Discovery tumbled around 27% each on Friday, while U.S. listed shares of China-based Baidu and Tencent plunged during the week, dropping as much as 33 and 48%. So the word is that this has turned out to be about $20 billion. I've seen upwards of 30 billion possibly, and it's due to the possibility of a hedge fund getting margin called. And the margin call, Algeco, I think was the name of the fund, Archegos, who answered the phone, declined to comment, was founded by Bill, a guy who found a couple other funds, and then they haven't been able to get any comment. So they sold 3.9 billion shares of Viacom, and look at this as we looked at it last week. You look at Viacom, and you say, let's look at the daily chart and see what's going on with it. Okay, it's actually set to open up down another 3%. Look at this drop. So you had topped out on the 22nd, and you had a 44% drop in the stock. Okay, so that's basically a dump. And so the main thing that I want to get out today is that if there's one, there's more. We've talked about this before. We've talked about the dollar. We're going to go through all those again and go over all that stuff as well. But this is going to shape up, possibly be a pretty ugly week, at least in my opinion. So again, over on the bottom of your screen, on the top, you've got the S&P 500 mini futures. Those are set to open up down 22 points right now. This is a 30-second chart. On the bottom, we've got the NASDAQ 100 futures. Those are set to open down 67 points. And then over on the big board, we've got the Dow, which is going to be the big one that gets hit. You can watch the financials get hit pretty hard. Hey, Liberty, come here. Leave him alone. All right. Oil, Brent crude is up 262 per barrel, where light crude is down 39 cents a barrel. So we've got that going on. And then the dollar. So here's a couple of the bigger ones. We have the dollar, which has been going up. And if you look at the daily chart, you know, the dollar has been slowly rising from 89.24. Now we're up to 92.763. So we're at levels of the dollar where we were back in November. Okay, as the dollar goes up, stock market goes down. Okay, we'll look at the yields now. Now, what was interesting was we had, and this wide band is a Bollinger Band here. But what we had is we had some issues where the 10-year yield has been going up big time. The U.S. 30-year yield has been going up big time. Feds left the rates unchanged 2 weeks ago, a week ago last Wednesday. And so you have everything at a high. So what I did was I downloaded some new stuff. Let's take a look at Bitcoin. Bitcoin back up to 57,940, up $2,100 in the last 24 hours. And we have Ethereum, which is up $86 in the last 24 hours. Can I put this? My buy sells here. There we go. All right. Now I've got my cheat line. Okay, so the green is your 50-day moving average since we're on a daily chart. The white is the one I use to front run. That's 180 period average, so 180-day average on this one. And the red is the 200. So the reason this is important is when we look at things like the Dow Jones Industrial Average or the NASDAQ, and we take a look at the NASDAQ, and again, the NASDAQ is not open yet. We still got another 13 minutes or so, and I drew some lines here back on the 25th, and we'll look at the S&P, and I drew some lines on the S&P back on the 15th of March. What I did was there's three symbols you can look at, and we'll start with the Dow. Okay, this, and let me go to a bigger chart here. Okay, this is the monthly. This is the percentage of stocks in the Dow Jones Industrial Average above its 200-day moving average. Right now, that number is at 90. So 90% of the 30 Dow Jones Industrial Average stocks are above their 200-day moving average. On the NASDAQ, it's 81% of all the NASDAQ stocks are above the 200-day moving average. And then on the S&P, has the biggest one, 91.88% are above their moving average. So what does that mean? Well, if I scroll back and you look at 2008, 2009, so this is a monthly chart we're looking at here. And when it goes up, 2009, boom, market goes down, hits the 200, goes down. Anytime we get above this 90%, the market has gone down. You put that in combination with the Goldman Sachs large block trades of roughly $30 billion last week, and you have to ask yourself, okay, if they're exiting positions on one hedge fund, how many other ones are going to come up? Along with the volatility for this week, along with a short week with the markets being closed this coming Friday for Good Friday and Easter weekend, it might spell a little bit of downturn on the open here. So again, what we have over here on the bottom of the screen, the S&P 500 is setting to open up down 21, and the NASDAQ looking to open down 48. My concern is that this could actually snowball. And by snowball, I mean that things could get out of hand possibly really quickly. We know the market's in a bubble. We know things are in the overbought range. We know that the dollar has been steadily going up. And while the dollar has been going up, and yields have been going up, the stock market has not been going down. The S&P 500 set a new record on Friday's close. So we'll see what happens with the market here. Taking a look at some of the pre-market action, we'll start out with the meme YOLOs. AMC is actually looking to open up a little bit higher, up 6 cents to 10.30. Cinemark looking to open down 23 cents. Oops, where's it at? There we go. GameStop, can't stop, won't stop. GameStop looking to open up 91 cents to 181. Palantir, again, this is one of the ones I have on my own watch list that I plan to pick up some shares once the market decides what the heck it's going to do. So we'll figure out that one, but I really, really like that company. Rocket Mortgage, again, this was one of the ones we picked up our dividend on that we got paid out that $800 on the 23rd. It's looking to open down 5 cents. And Tesla right now is looking to open up down $4, almost $4 a share, so down to $6.14. Not as bad as what it was in the earlier part of the pre-session, where it got down all the way down to 603. Yeah, 603.72. Did that snap? Right around $603 a share. A big buy here. This looks like it was probably a fat finger buy, or somebody selling it off, and then buying back in. So somebody bought it back up at 621. Maybe they had an order in there or something like that. Who knows? AMD is looking to open up down 18 cents. Boeing is looking to open up $6.24. And Southwest Airlines to purchase 100. Big news for them. Southwest Airlines looking to purchase 100 Boeing 737 MAX aircraft. So that's huge for that. So that's an order that we've been waiting for. We knew it was coming. We knew that the talk of them going to Airbus and looking at the A320s or something like that were not going to be anything of substance. There's no way Southwest was going to buy from Airbus. They were using that as leverage to make a deal. And also Southwest was very cooperative with the issues after the crashes of getting compensation from Boeing based on orders and paring down stuff before. So they're looking to have a nice update as well. Let's see here. I want to look at Apple. And so Apple is also looking to open up 47 cents. Okay. And then let's see some of the other ones. Intel. So a nice little recovery here off the bottom here. Intel looking to open up down 63 cents. Microsoft is looking to open up down $1. 7 minutes till the open. Nvidia is looking to open up down $1.83 a share. The triple Qs are looking to trade down $1.06. The SH, which is the short S&P 500s, are looking to open up 8 cents. Again, the short and the SQQQ are short funds. And the SQQs is looking to open up plus 14 cents on the open, but it's coming off of its high. It really, to me, does not make sense why we have this this huge rise in the pre-market, roughly 5.5 hours ago, and then it drops. So again, I'm still looking for a sell-off to start today, and we'll see if it gets ugly or not. But we'll take a look at that. All right, so I'm going to change these over to live over here, and we're going to have the S&P 500 on the top, and we're going to have the NASDAQ Composite on the bottom. So those will start to trade here shortly. Which is this one? There we go. And I don't know why those look a little bit different there. Okay. And again, so what we're looking at is the S&P is looking to open up down 21. And the NASDAQ 100 is looking to trade down 47 points. And the Dow is looking stable, about the same as it was when we first started this half hour ago. Looking to close down 165. So we're gonna start heading south, and again, 15 minutes after the open, we'll hit the heat map for the sectors. But what I can tell you is the industrials are going to be down. Your banks and regionals are going to be down. I would not be surprised if some of your oil and energy stuff goes down as well. Other lookers, GM is looking to trade down 40 cents. Oshkosh B'gosh, the truck company, manufacturer up in Wisconsin. Nothing in the pre-market for them yet. Roblox looking to trade down 226 back down to 68.71. They had a nice run up Friday, as did a lot of the stuff after the drop, and then it came back up. SPY's looking to trade down $1.91. Again, this is the relevant to the S&P, and the TLT, again, that's relevant to the 20-year Treasury, is looking to trade up a little bit. U.S. oil, a big holding I used to have and took some profits out at 45. Now that's down 28 cents. I want to get back into oil. We'll see when that happens. Workhorse is down 17 cents, and ExxonMobil is looking to trade down 61 cents. Okay, precious metals, Bitcoin, and then we'll be about ready to get to it. All right, gold currently down $7 an ounce. This is the troy ounce down to 1723, and it's been on just a solid. I had drawn lines over here. If you look at these, if I were to extend these, it's pretty much following that channel I built back in December on gold. Palladium is down $104 a troy ounce to 25.70. Platinum is actually up. It was down a little bit earlier, but again, it can't breach that 1200 level again. Hasn't been able to do it for a little while. And silver is down 17 cents again, manipulated market. I need to get my Apple moved back up. Come on. Hey, come on. All right, well, there we go. So we've got about 3 minutes here until the open. And click there. All right. So one last check before we get going. S&P looking to trade down 19. Let's go over to a 30-second chart. But bouncing off of the bottom a little bit. NASDAQ down 37. And the Dow down 164. All right, so we will watch the S&P futures here. And I need to open up another program. And again, if y'all have any questions, feel free to drop them in the chat on any of the 3 platforms that I'm currently streaming to, which is Facebook, YouTube, and Twitch. So we are live streaming on all 3 platforms here this morning. Facebook's finally got that one going today. And if I can figure it out, I'm probably only going to stream on Facebook for an hour or so. But you can catch me on Twitch or YouTube as Crypto Sonar, spelled out as one word, CRYPTOSONAR, and you'll be able to find me there. All right, let me see if this is going to open up for me here. I didn't open up my brokerage account yet. So the software I'm using again is TradingView, and that is my preferred one for looking at things here. Where is? All right, come on. And if we go super volatile, some of the brokerage platforms tend to have problems if it's super busy. All right, 2 minutes until we open. Hey, come here, Liberty. Liberty, come here. What are you doing? What are you doing? What are you doing? All right. All right, so S&P turning a little bit there towards the north as we get closer to the open. We've got about 40 seconds before it opens. NASDAQ still looking to open down, but not as bad, only 30. And the Dow bouncing up a little bit, looking to trade down 150. And let me close this. There we go. All right, that's ready to go. Oops. All right, let's go to the S&P. And here we go. Okay, so S&P opens up on a down again because this is 30-second chart. So S&P opens up down 15. We have the Dow Jones opening up down 145, and then we have the Nasdaq opening down 28. So right off the bat, about almost 0.5% on the Dow, 0.25% on the Nasdaq, and about a 1/3% on the S&P 500. And you can see those. So what I've got over here on the right hand, on the bottom of your screen, the top pane at the bottom, this is the S&P 500, and then the one below that is going to be the Nasdaq Composite Index, and we'll make those bigger for you. There we go. Now down 29 on the Nasdaq, and down 100 on the Dow. So both of them bouncing back up a little bit, which I find very odd. Again, you get most of your volatility, but we've got some other movers here. Apple up 40 cents, AMD down 73 cents, Boeing up $7. Again, big news on Boeing today. They secured 100 orders for the 737 for Boeing. So Boeing's going to have a nice bounce here today, back up to 250, 270, and heading north from there, it looks like. And again, the big news on them is they agreed to purchase 100 737s and firm orders, with the first 30 to be delivered next year in 2022. They also converted 70 MAX 8 firm orders to MAX 7 firm orders and added 155 MAX options for MAX 7 or MAX 8 aircraft through 2022 through 2029. So they knew this was the right time to make the deal. Again, the 737, I would feel completely safe flying on that thing. It is the most regulated and inspected aircraft of all time, I think, at this point. So the company said it anticipates contractual aircraft capital spending for all years 2021 through 2026, which consists of 169 orders with Boeing to be $5.1 billion. Its estimated contractual aircraft capital spending is expected to be around $700 million in 2022 and no more than $500 million in 2023. Ford trading down 2 cents. Intel down 89 cents. Microsoft down $1.29. Again, you're seeing the pre-market here in a slight yellow. This is Friday's post-market. Okay, so we're starting to sell off a little bit here. Now we've got the Dow down 70, Nasdaq's now down 42, S&P down 12. Nvidia trading down 87 cents. Triple Qs, which is the Nasdaq ETF, down 96 cents. The short S&P, so if you want to short the market, SH is one of those symbols. Again, not financial advice, not tax advice. I'm not a licensed financial advisor. Get your real opinions on what you should do from someone else. I'm just some guy on the internet. This is for entertainment and education purposes. Thanks for tuning in. And the SQQs, which is the short Nasdaq 100, is up 13 cents. So again, what we got going on is the Dow is down 66. S&P down 11, Nasdaq down 41, so all three in the red. Check our meme stocks. AMC trading down 5 cents. GameStop bouncing between positive and negative, down 56 cents, down $1, then up a little bit, so currently at 180. Cinemark down 17 cents. Palantir down 24 cents. Rocket going up at 132. Social Buzz, GameStop trades slightly higher. Other Wall Street bet stocks mixed. We knew that already. And Tesla down $6 to $612. Again, I exited my Tesla a long time ago at $663. I missed the run up back to 900, but it certainly was a good decision. I never owned GameStop. My AMC, I was very profitable on 2 times this year, and the second time was a couple of weeks ago where I exited at $11.24 a share, right around there. And again, if you're on Facebook or Twitch, or YouTube, feel free to ask a question. If you want to help me out and hit that like button, that would be awesome as well. Our Bitcoin is doing very, very well today, up $2,200 over the last 24-hour period, and the Ethereum is up $95, back up to $17.82. Again, if you were with me last week, I did an additional buy into Ethereum. I picked up another 1.5 Ethereum at what was it, 1588. So 1588. So 1588 divided into 1783. So since I bought that last week, it's up 11% on that. And Ethereum, again, between the two, Bitcoin and Ethereum over the last 12 months, 625%. So 625. Okay. Bitcoin, was that 536? Minus 536. So 89% Ethereum has outperformed Bitcoin over the last year. Okay, now AMC turning positive. We're still negative on the market, but the Dow is bounced back big time here. Only down 18, NASDAQ down 10, S&P down 5. So this is going to be a very, very interesting week and day. So Palantir, again, this is one of the ones that I want to look at, and I want to possibly get into some more. I hate that they include Palantir in the social buzz crap that the newswires put out. And S&P looks like it almost wants to turn positive. And no real news on Palantir. Cool. All right, Tesla. We'll see if that can get, and we're going to get in 9 minutes. We'll get the other stuff back. Gas prices down again, just a little bit. The 286.3 for a national average. You're looking at an average price of $389 in California, $317 in Oregon, $332 in Washington, $303 in Illinois, Florida $287, Pennsylvania $299, back below $3, and New York still at $290. So again, anything you see over $3 is going to be you know, the heavily taxed states as far as gasoline prices go. Fear and Greed Index from CNN now says neutral at 52, which is just unbelievable as we're turning into a green day here. All right, so we'll get these updates in about 7 or 8 minutes. Tesla trying to turn green on the day. Apple is now green. So Apple up a little bit, up $1.11. AMD up 26 cents. So it looks like the semiconductors are going to be up a little bit. Nice run. Holy cow, AMD. Very nice. On a buy signal here. It's a quick 1.5%. I've not entered any trades yet today. Boeing up 930 now. Setting to do its run. Let's take a look at the daily. And if we're looking for another past support level, you got to go all the way back to pre-pandemic. So they are now, they're still down below where they were at the start of the pandemic. But they peaked out all the way up here at 397, something like that, 397 back in September of 2019. That was pretty much the high before the last high back in the March. And I think March of 2019 was their all-time high up into the 450 range. So some old due diligence there on them for its next upswing. So they're looking pretty good. Let's go to the 3-minute. Should have a solid buy signal on the 3-minute chart. Breaking outside of its polar band to an upside, so this is pure momentum pushing to them, and now we're green on the day. Face plant. This should statistically not be happening. All right, but it is, so good for that. All right, so up 788 now. Just pull back just a little tiny bit. What? What do you want? What do you want? You gotta go potty? All right. I'll be right back. I gotta let the dog out, and then we'll be right back at it. Come on. Outside. Sit. Take. Okay. She's happy. She got her bone. She's good to go. Okay, so the S&P, let's go right back into that again here. Currently down only 4. The Dow turned around from a 150 points to a plus 14, but a lot of that is going to be Boeing. They're just having a huge day, up $8.44, up almost 3%. And 3 minutes till the heat map shows up. AMD up, Intel down 63, Apple up 87 cents, Microsoft down $1.37, trading below its 50 period average. Again, up here towards the top, you'll see different ones. Like I can do a 1 second chart, 5 second, 15, 30 seconds every 1 minute. So what these represent is the green is the 50 period average. So this is the average of the last 50 30-second candles. The white is 180 because I try and front run, and the red is the 200. So where those actually only come into play for totality is going to be this is the 100, because this is now a daily chart on Microsoft. It's trading above its 200-day moving average, which is the red. It's trading slightly above its up above its 50. But what I want to show you is I want you to look at the US dollar. And looking at the US dollar, you can see that it had a full candle close above its 200-day average. Okay, so if we go back and say, well, when's the last time it had a close above its 200 average? It was coming down at that point, but looking back, look at how low this thing is over time, and this is going all the way back to 2018. So we're definitely in an upswing again on the dollar. So we'll see what happens here as you know, treasuries and stuff like that. So you've got the dollar up to 92.807. You've got the 10-year back up to 167.4. Again, we talked about this before where it hit 170. What are we at here? 175 or so. Okay. And then the 30-year yield is now up also 2.376. So it's up as well. And so you got that up, you got the dollar up, you got the 10-year up. All of those are up. And now we've got the Dow up 30. Thank you, Boeing. NASDAQ down 28 and the S&P down 6. And the Dow is above all 3 of its daily averages. The S&P is well above all 3 of its averages as well. Back on Thursday, it actually dipped below during that sell-off on there, but then it turned around and hit a brand new high for a close on Friday. And the NASDAQ is also trading above its 50 and 200. It's 180 and 200, but trading slightly below its 50-day average. So now we've got all 3 averages back in the red again. Dow down 3. Oh, now it's up 3. Now it's up 1. See, you can look at it. If you really want to have fun, you can take this and put it on a 1 second chart. And you can watch it and you can see if you can trade this quick. Oh, sell. Where's the buy? Where's the buy? Nope, there's the buy. See, you can't do that kind of stuff. I leave it on a 30-second, but for my TA, my technical analysis, if I'm looking to buy something, I look at something as far as momentum. I'm looking for a buy signal the way I have it programmed. I'm looking for it for the MACD, moving average convergence divergence, and I'm looking for the blue above the red line as well. So there's different things that I'll look at from that standpoint too. Okay. And where is this one on? Hold on a second. That's weird. Very interesting. All right. Okay. NASDAQ now down 40. S&P down 8. Let's look at the NAS. 30-second chart. It's a little bit, again, this is a 30-second chart though, but now we're starting to see a sell-off. But even so, looking at where we're at on the open, you know, I pretty much ignore the first couple. Let's go to a 30-second chart here. I pretty much ignore the first volume things that we get out of the gate. And that looks like it's acting goofy. Hold on a second. Let me reload this one. Okay, sorry about the lag there for a second. All right, there we go. Now it seems to be working again. Okay, so let's say you were looking at something like the SPY. All right, so let's go find the SPY. And let's say you were looking to, let's say I was looking, hypothetically speaking, of course, to purchase a SPY. I want to buy an ETF that trades like the S&P 500 index. So it's like buying the index, where a mutual fund you get the expenses. This is an ETF. It also has expenses, but lower. And ETFs consult your tax advisor, but they issue K1s, which means that on my ETFs I have to pay realized and unrealized capital gains whether I sell the shares or not. So this is the SPY, and right now this says the SPY is above its 50-period moving average. So the green is a representation of 50 30-second intervals on the SPY. Okay, and the symbol on this is exactly that, SPY. Okay, it's also above its 50 and 200 average. I've got the red above the blue and the moving average convergence divergence. So that's all you need to know is red is bad. If it's above the blue, that's bearish. Blue above the red means it's bullish. I would look at buying signals on a 3-minute chart is usually what I do. I'll come over here. I will look at the S&P and I will look at the NASDAQ. But actually, we're going to change this bottom one over to the VIX. And the VIX is going to be the sentiment. It's going to be an inverse of the S&P 500. So what that means is if the S&P goes down, the VIX, this is volatility. We'll call it fear and greed index if you want, is going to go up. So this tells me the sentiment in the market right now is bearish. Okay, that's already represented with the S&P being down 6, NASDAQ down 16, and the Dow down 18. And the S&P is trying to consolidate. It's in a little bit of a mini here consolidation phase. So off the open, dropped, rallied back up a little bit, pulled back, and now it's just vacillating between the two. So it's interesting. I'm having a good day. I'm actually short the market, so I'm actually positive on the day on everything I have. Let me take a look at my Ford shares here. Scroll this over. Still have 100 shares of Ford in case I want to buy that Ford Mustang Mach-E later this summer. We'll see. That's down $3. But all my short positions are up on the day so far. So that was a good decision. So I'm up, call it $2,700. All right. So let's take a quick look. So again, S&P currently on a sell indicator. NASDAQ down 42. Broke through its 50-period average on a 3-minute chart. That's bearish. However, see the volume here? This volume is not as high as the buy volume was right after it opened. Oh, that's a future. Sorry about that. Go back up here. Come on, where you at? Here we go. So it's operating on a sell on the 3-minute. So all three averages are down. Dow down 44, NASDAQ down 28, S&P down 9. But the bright spot of the day is, of course, Boeing. And Boeing is having a super nice day. They pulled back off of their high. It hit a high of 249.87, so down to 251. So 251 divided into 240, 249. Oh, 254 is its high on the day. So down to, call it $3, a little less than 1%. So they were up about almost 4% here. They were up about 3.5%. And now they're pulling back just a little bit. Let's drop down to the 30-second. Let's see here. Okay. So usually I'll discount the volume in the first little bit of the market opening. So I'll kind of ignore this first run, and then I'll take a look at volume, what it's doing during the day. So you see some sell pressure here off of after it topped out at that 254, and that was about where are my pivots not on? Hold on a second. Oh, there we go. Turn those puppies on, make it easier for me to read the chart. So after it topped out, right about 9 minutes after the open here, or 6:38 and 30 seconds, it topped out at 254.41. Then it's been pulling back since then. So I'll look at the top wick of that candle on a high, and then I'll start determining volume and what's going on with the volume. So what's going on with the volume? Had a little bit of buying here, little slight consolidation, then a sell-off. Now we got buyers coming back in. Are the buyers going to exceed? We got one good candle here. Are the buyers going to exceed what sold off over here? It appears initially yes, but that volume is slowing down. So when you see the bigger ones, volume is bigger here than it is here. All these bars down here are volume bars. And those volume bars are going to tell you whether people are in that particular candle, and each candle represents 30 seconds. Are the majority of those buyers buying, or are they selling in that candle? So now we have a nice bump there. But again, this, other than this first candle here on this buy, it's not exceeding the selling volume, and you could already have people day trading this and making profits. So there were people that probably got the news on it over here, because that came out on that order. See, there's a timestamp on this thing. Let me see the first one here. Actually, let me pull it up in here and go into Boeing here. Oops. And the first one came in for update. There we go. At 4 o'clock this morning Pacific, so 7 o'clock Eastern time is when the story hit about Southwest. And you can see once that did happen, boom, buyers came in. And so let's say that they were day trading this already before the market opens, and they captured about 3%, 2.25% of gain, and it's pulled back off of that. This volume is not exceeding, see the line right here, this buying volume is not exceeding the selling volume. So be careful here. I love Boeing. I did very well with them last year. Great company. They're local to my area because I'm up in the Pacific Northwest here. But now the market's starting to turn a little bit, heading south here. And it didn't make sense. I kind of kept quiet on it on the open, but now we've got the NASDAQ steadily going down here, down 59 points now. Dow down 30, S&P down 13. And we've got, see this down here on the bottom of the screen, this bottom one is your VIX. That's the volatility of the S&P. As that goes up, the S&P 500 will go down. So this tells us this next one above that one is the S&P 500. That one is basically showing a declination of value. So people are selling the S&P right now. They are bearish on it. And the VIX is going up, so the volatility is going up. And so so that's what you have going on there. And then looking at the Dow again in the pre-market was down 191 points in the pre-market. It was down. It opened up. It was actually up a little bit on the day this morning. Now it's down 49. And I basically, we'll see what happens during the day in this week, but this is going to be one of those weeks. It's going to be a volatile week. You're going to have a lot going on in the markets. You don't have a lot of news as far as the Fed or anything like that. And you have a short week. So the bond markets will be open on Friday, I believe, for a half a day. And then the stock markets are closed, though, for Good Friday. So you will not have any trading on Friday. Friday is when all the unemployment numbers and stuff come out. So this week, again, got a Fed speech today. Modest Monday losses for U.S. stocks amid concern about major funds margin call. And again, that's the one that we talked about. We talked about a little while ago, where U.S. stocks bounced between small gains and losses at the start, following reports that a large investment fund was forced to sell massive holdings in stocks that some fear could ripple through the broader market. Okay. I have never in my entire life seen this kind of a lineup for the markets. I've never seen it. It doesn't make sense that you have a dollar that is going up, okay, and the markets are still going up. That you have a 10-year treasury yield that's now up to 1.687. You get the 30-year yield up to 2.388, and yet the market was still going up. It's defying logic at this point. But a little bit of buy on the open. So if you weren't aware of that news, that was huge news that came out over the weekend. And what it was is Archegos Capital Management sold some $30 billion in holdings. Think about that for a second. $30 billion, and this was through Credit Suisse. Says they're going to take a hit due to the volatility in the market, but they didn't name the fund. Goldman Sachs sent a letter to every one of its investors telling it was going to that it was participated in this. It then goes into COVID stuff. That goes into the story on Southwest. It's a very boring earnings week. There's not really a lot going on. There's a 10-year Treasury. Was down slightly, but now it's actually up a little bit. So Treasury's going up on the 30-year. Treasury's going up on the 10-year. Let's look at the TLT, the 20-year. 20-year is actually down a little bit, but again, they're not issuing these longer-term bonds. They're issuing the 10 years, or they're really issuing Treasuries at less than a year. And so now we've got the Dow down 30. Got the S&P down 15. And the NASDAQ starting to do exactly what I thought it would do. And now it's down 83. So what I'm worried about here is it already broke its 50-period average on a 30-minute chart. Let's go to 3 minutes. So we're on a 3-minute chart now, okay? On a 3-minute chart, counting the pre-market, because we're still not a half hour into the open, I'll eliminate that. What we have here is the green is the 50-period average, the white is the 180-period average, the red is the 200 moving average. The yellow line is due diligence I did on the S&P all the way back in 24th of March when it headed south, and I was looking for support and resistance. And what we did was it formed old resistance into new support, went up from there, came down to its new support level, which was the old resistance over here. Got that, broke through that on Friday, came down, broke above it, and finished off Friday strong, and now we're starting to head back south again. So it has the potential to get a lot worse before it gets better. That's all I'm saying. So it's going to be a volatile day. You're going to have ups and downs. If you're day trading because you're a pattern day trader, you'll probably be able to make some scalps and make some money on this stuff. And if you have any questions on any stocks or anything else you want me to look at, feel free to type the symbol or the name below or ask a question and I'll go over it. Ethereum is doing very, very well today. It's up to 1781. I like to see it above 1800, especially since I bought a bunch more last week. And Bitcoin back up to $58,000, and you've got some options expirations on Bitcoin coming this Friday, and pretty much when these things come out like this, and you've got the quarter ending on Wednesday, so you can look for a lot of the mutual funds got to rebalance if they haven't done so already. They're going to get skittish because of this Goldman stuff. This stuff is going to make everybody skittish for the market, including myself. And I was reading things over the weekend where people have said this is unprecedented, this large of sells. So here's the question you need to ask yourself. This is just one fund. Is it a one-off, or is it the start of something else? So I ended up shorting the market back when the FOMC chairman spoke 2 weeks ago. So I've actually been short in the market since the 17th, before his meeting started on the 17th. And I've done well. I've sold some stuff, I bought some stuff, and done pretty darn well. But right now you've got the Nasdaq down over 101 points now, S&P down 18, Dow down 28. So with me being short the market, that means at least right now on paper, I'm up like over $6,000 because I'm already short. So what do you do if you're stuck in this? Well, you had a couple conversations over the weekend, and one of the things, and let me pull up the Nasdaq, because the Nasdaq is going to be all of your technology type stocks. So if we look at the S&P 500, we say, okay, what areas are up, what areas are down? You know, your tech, your banks are going to start to get hammered a little bit. You've got energy that's down. So where's your safety? Well, airlines and defense. Boeing is up, Raytheon is up, Lockheed Martin is up, Northrop Grumman is up, General Dynamics is up, L3 Harris is up, Transdigital Group is up. So you have all this up sector over here. You've got cyclicals, Walmart, Costco, Target all up. Target down just a skosh a little bit. Dollar General down a little bit. Amazon down. Tesla down 2%. Google down. Facebook actually up 1.48%. Microsoft down. Apple up a little bit. Oracle up a little bit. All the chip makers were positive on the day. They are now negative. So as things start to head south here, you know, you have to ask yourself, you know, what happens when things go bad? And what happens when things go bad is we can look at a weekly chart, or let's go to monthly. You can look at a monthly chart on the NASDAQ and say, okay, so when, oops, let me come back over here. And you can say, okay, let's look at what happened at other market downturns. So this is a monthly chart. So when it hit highs, and again, this is going all the way back to the year 2000, right? As things go down, it takes a while for it to come down. Now we're in the 2002, up. It started going down in 07. It didn't bottom out until 09, then started going up. And then you had 2010, a little bit of a drop. 2011, 2012, a little bit of a drop. And then pretty consistent upside, slight pullback in 2015, down a little bit. Took a couple months though. You know, that took a couple months, and let's look at the math on this. I'm going to zoom in on this. So we're looking at a period of July. And so I'm going to take my little thing here. I'm going to pin it to the top here. I'm going to go to the bottom here. And it dropped about 18% in 2 months. So that's an 18% drop in 2 months, okay? This is back in 2016. Take the top of this candle here. Bring it down to the bottom of this candle here. Down 18% in 2016. Now let's go back over to 2019. This is the NASDAQ, by the way. We'll take this top here, down to the bottom, down 23%, okay? Now we'll go into last March. Last March, topped out in February, down 33%. So when it goes down, it takes a little time for it to figure out how far down it's going to go. Oh, meanwhile, the Dow is back up again 15. But again, the Dow is up because you got stocks like Boeing that are in there that are driving it up a little bit. You got your Walmart, Procter & Gamble's, and things like that. NVIDIA is now turned up a little bit, okay? So when these things take down, it happens over an extended time period. You know, if you look at a weekly chart now, and we go back to March, and we say, okay, yeah, this was, you know, this is a week. 1, 2, 3, 4, 5 weeks to hit the bottom before we started bouncing up, right? So it went till 23rd of March when the sell-off started. To actually, if you were early on it, you were the third week in February is when the sell-off started on the NASDAQ. And we can take a look at the S&P and see the same thing. 1, 2, 3, 4, 5 weeks before the S&P bottomed. Take a look at the Dow. 1, 2, 3, 4, 5 weeks before it bottomed. What happens is you have markets that go up. When they're in a consistent rise, markets go up like this. The problem, or they go up like this, slow and steady, a little bit of wavy, and going up, right? When markets go down, they go like that quickly. And so if you were to make a move, like for example, you know, I basically, quit my job in the middle of a pandemic. My last day of going into the office was October 25th of 2020. And what I'm doing is I'm creating income streams. And I'm all about creating different income streams. Like right now, I've got my miners working and they're slaving away on my cryptocurrency. And here's a live status of all my miners. Okay. As of right now, I'm hashing 13.92, so I'm hashing almost 1.4 gigahash, okay, per second. I've got a built-up balance of $500. I'll get another payout in 6 hours. So in 6 hours, I'm getting another $500 of income thrown into my account. What that comes out to, so I've got 6 different miners. This is 7 different computers with 36 graphic cards mining, confirming transactions on the Ethereum blockchain cryptocurrency market. So what that gets for me is I'm earning now this varies, but I'm earning about 1.9 ETH a month, which is $34.15. My last electric bill was $811. So my profit is projected over the next 30 days to be about $2,600. Okay. I don't have to trade anything in the market. I can make enough off of this. And I believe I'll be able to continue mining until 2023 when that gravy train ends. All right, so looking at the Dow, it's now down 4, but the NASDAQ is the one that's getting hurt here. And it's now down 113 points. Let's go to a 3-minute first. Go to a 30-second chart. And so let's say you had a 401k or you had mutual funds, and if they're in retirement accounts, you won't have any capital gains. Consult your tax advisor, but you won't have any capital gains if you sold something and went into something more conservative if you thought there was going to be an extended downturn in the market. And I look at catalysts. And when I look at catalysts, the catalyst I'm looking at is a rising dollar, a rising 10-year yield, a rising 30-year yield. Okay. Markets should be answering to that going down. But the biggest one for me is the big lie, where I think the Fed is misleading us and the government is misleading us on inflation. You can't take oil and you can't take the price of a barrel of oil and say at its bottom in November, the price of Brent crude has gone up 80%. So oil prices per barrel of Brent crude oil have gone up 80%. Oil light crude, which is what ours is pretty much pegged to in this country, up 80% a barrel. So the price of oil since November is up 80 cents a barrel. Now it had a nice run, and I sold all my USO, and when I went short to market, is when I sold that stuff. But now what's happened is with that rising fuel prices, that's inflation, folks. If oil goes up, you're paying more at your gas pump. Your food prices, if you save your receipts at all, start saving them. And if you buy similar where you were spending $110 before, if I'm spending $85 for Amazon to deliver my groceries, and now it's $97. Or I go get gas and I was paying $2.89 and now I'm paying $3.44. If you don't think that those increases in food and gasoline are not going to go over to other sectors of the economy and drive up costs, and as yields go up, it's going to cost companies more money to borrow money because their interest rate is going to climb as well, that's going to cause prices to go up because they're not going to pay for it. They have a responsibility to shareholders to drive revenue. And if you're going to drive revenue, you're going to see everything going up. UPS is going to go up. FedEx prices are going to go up. All this stuff in manufacturing, you might see fuel surcharges again. Don't be surprised this summer as fuel surcharges go up. But the big one is that you have OPEC meets this week. I don't know what day it is, but they're meeting again. Let's see here. I believe they meet on Thursday. So this coming Thursday, you have OPEC. They're going to have their meeting, and they're going to come out with their guidance. And what they did the last time is they said, nope, we're not opening up the spigot. We're going to constrict supply here. So supposedly, allegedly, the market is opening back up, right? The economies are opening back up. Everything's going to be right with the world. OPEC has basically limited production through April. That's what they said the last time. They've limited their output through April. On Thursday, we're going to get their nice outlook. Now, Saudi Arabia, Aramco, is not a big fan of this current administration. And here's why. Saudi Arabia has been in a proxy war with Yemen, with what are called the Houthi rebels, okay? And as soon as President Biden got in the office, he basically said, we're removing our support for Saudi Arabia with regards to the Houthi rebels in Yemen. We don't support you going after these terrorists that have been blowing up refineries and attacking ships in the Gulf for a few years now. And we actually came out, our country actually came out and said, you know what? Yeah, we don't support you in that endeavor, okay? OPEC turned around and said, we're still going to constrict supply. Why would they constrict supply? If it's based on oil reserves and what's still out there. NASDAQ, big drop, you guys. S&P down 27, NASDAQ down 128 now, Dow down 34. I haven't read anything on OPEC. I don't have a firm opinion on what they're going to say. I'll probably do my research on that tomorrow or Wednesday. Before the meeting on Thursday, I'll start digging into my DD, my due diligence on that, and what I think will happen. But right now you've got all this stuff going on where oil's going up, the dollar now up to 92.837. It's been on a steady rise. It's up only as a percent now. This is the daily chart, but since January 6th, interesting date, it's risen 4%. So the dollar has gone up 4% since January 6th. Okay, it's last bottom. And that is a historical bottom, I believe. Yeah, that's a historical bottom for then that hasn't been seen. That bottom has not been seen since the 19th of April, 2018. So let's look at that. April 2018, you had a rising dollar, okay? Look at these two charts. Rising dollar, rising dollar. So now let's look at April of 2019, and let's go to the NASDAQ. And let me go to April, March. It actually went up during that time frame, but not long after that, it caught up and we came down. This is March of last year on the NASDAQ, okay? So I drew due diligence lines last week, and let me take it out to a 1 hour chart here. And the reason I have a vertical line here is I looked at the NASDAQ, and when I looked at the NASDAQ, I drew a vertical line so I knew what day I did these lines. And I looked at support and resistance, and I said, okay, if it goes down, what could it potentially go down to? And I said, well, if it goes down initially, it could have about a 7% drop or so. Or it could be a 30% drop if it comes all the way down to these levels on the NASDAQ. I did the same thing with the S&P. I said, okay, if we're looking at the S&P, what it could possibly go down to, the first drop was 7%. Then it was a secondary drop down to 9% of old support, new resistance, etc. So its next support level I have down at 37.15. If it goes to 37.15 divided into 39.53, you're looking at about a 7% drop off of where it was at that day. Okay, so now the S&P is down 22, NASDAQ is now down 118, the Dow is now down 40. Okay, if it drops through this 7% layer, I said the next one down is 9%. If that happens, it may blow through that as well. This is the S&P 500, and then it's look out below. Then you're talking about potentially a 19-20% decline. So that's kind of where my head is on this stuff. I could be 100% wrong. Again, don't take my advice on just some guy on the internet. If you do anything that I do, especially any trades that I talk about on here, you're going to lose 100% of your money. Okay? Get professional advice. I'm just giving you my opinion on what I think may or may happen in my own journey on this. And now you can look at this. Everything is just about red now. You have some bright spots. Again, Boeing 100 airplane order at 4 o'clock this morning. That came across the wires for 100 brand new 737s and a revision of other 737 MAXs to equal out to 162 planes over through 2029. Yeah, 2025 through 2029. But a bulk of those, they're going to start taking deliveries of this new 100 orders because they still have other orders coming this year and next year in 2023 or 2022. Sorry, in 2022. So you have Walmart up, PG up, Facebook up, Oracle up, IBM up. What's this one here? Broadridge, who cares? Berkshire Hathaway up, all the banks down. And so now we've got go back to the 30-second chart here. Okay. So you have the S&P down 21 right now. You have the NASDAQ down 112, but bouncing off of its low. And you have the Dow down 29. So starting to come back just a little bit here. But as we get closer into the lunch hour on the East Coast, we'll see what happens. We'll see what all these guys talk about at lunch. What they're doing right now on Wall Street is they're calling all their buddies at Morgan Stanley. They're calling all their buddies at Goldman, if they didn't already do it yesterday. And they're figuring out not if they're going to get out, but when they're going to get out and what it's going to look like. Because if this happens, I just don't believe in the bullish sentiment on the market. I just don't see it. I don't see it with a rising dollar. I don't see it with rising yields. It's just, I've never seen them line up like this, ever. Like in my entire life, I've not seen this situation. And that news with the sell-off that we had is just unbelievable. So 11, 10, 9, 8. At 8 o'clock this morning, Federal Governor Chris Waller speaks. I don't know where. We'll see what he says. He's just another FOMC guy. Thursday, you get some initial jobless claims. But Friday, non-farm payrolls, unemployment come out. But again, the stock markets are closed on Friday, April 2nd. So that is a bank holiday. So all the banks will be closed as well. And then we have the end of the quarter on March 31st. So you have all the mutual funds and everything else doing their rebalancing of stocks and bonds, percentages that they have in their prospectus of what they have to balance to. And then the big one on Thursday, right? Yep. On Thursday, you have the OPEC meeting. That's going to have to do with oil, obviously. So, large trade block, Goldman, billions and billions of dollars, upwards of $30 billion being traded out and sold off out of the market. And where there's one, I tend to believe that there's probably going to be more than one. And I don't know if this is the beginning of it. It's still an absolute guess at this point. But, I posted yesterday about, today was going to be a down day. And then it started down. In the overnights, it was down big time. You had the Dow down like 191 points overnight when I woke up in the middle of the night and looked at it. You have the NASDAQ that was down about 80 or so. Now it's down 104. So it's actually lower. And you've got people taking some profits. Even my AMC, when I had AMC and I had those call options out to April 16th, I exited all those. And I made some decent money on those. I could have exited sooner and made more profit, but I still made profit. And that's the difference. I did the same thing with my U.S. oil shares when I sold those. Again, U.S. oil is one of the ones that I want to buy back into because I sold them. I sold them up here. Where's I at? Somewhere up here I sold them. Oops. Hold on. Go back. Where did I get out of those at? 45? Up here. So it was, I think it was the 17th. Yeah, it was the day before the Fed, Tuesday the 16th. So Tuesday the 16th, Yeah, I sold at 44 something or whatever. So by doing that, what I did by doing that is because I want to buy back in. So 41.12 divided into we'll just call it 44.25. You know, that's 7%. So I would be down 7% right now if I would have held on to my US oil. I sold it after I did some due diligence. I saw it start. I thought that it would start to break through, and I actually sold it. In this range, this 44 range up here. I didn't draw a vertical for the day I did my DD on it, but I saw some things happening in oil. I saw inflation. The thing about oil is, if inflation increases, oil actually goes down. But we've had this huge run up in it. But all it takes is one more catalyst in the Middle East and something to go south there for oil to go up. It wasn't going to be that tanker in the Suez Canal. By the way, that tanker in the Suez Canal, they freed it, I guess. Let's see, tanker Suez freed. I believe it's floating free now. There we go. Giant ship finally freed, allowing canal to reopen. So there we go. So that was yesterday. So the canal is opening up today. They had about 400, between 300 and 400 ships spread across both sides. Some of them have already gone through, and I forget the percentage I read. I think it was something to the tune of 15% of all trade goes through the Suez Canal, or 13, something like that. Bloomberg usually has paywalls. New York Times has a paywall. Here we go. Oh, Steps Up Efforts. This is an old one. Let's go to news. 4 minutes ago. Ever Given container ship refloated in Suez Canal. Oil prices slide. Did they? Hold on. Did they? Brent crude is up 262, but light crude is down 54 cents. So light crude is down 54 cents. Suez Canal fiasco could disrupt supplies for months to come. No, it won't. It's already done. So what were we closed? Like a week? I think we were closed about a week. I hate paywalls. Has been partially freed by salvage crews. It's unclear when the vital trade route will open. $9.6 billion US of goods that are being held up each day that it was closed. It just means now, you know, one of the other issues, about 12%, there we go. About 12% of global trade passes through the Suez Canal, which connects the Med Sea to the Red Sea and provides the shortest link between Asia and Europe. So 12% of all trade coming from Asia goes through the Suez Canal. Otherwise, they got to do what? They got to drive all the way around the Cape Horn, Horn of Africa, Cape of Good Hope, sorry, to get around the tip of Africa, and it can add roughly 2 weeks. Some of the ships already started doing that. But the other issue is you still have apparently a serious shipping container shortage because of China and their economy and their manufacturing that had opened back up. There's been a shortage of shipping containers. So all those ships that were delayed by 2 weeks, you now have manufacturers that didn't stop production for 2 weeks because of this. They now have stuff loading up, just sitting on their docks waiting to be shipped. So that could delay some more things. Mostly, it looks like mostly to Europe though, unless they went around. But if they went around, again, you're talking about a 2 week lag. So it affected things short term, probably for a couple weeks. They'll get things back to normal, and they'll get that figured out. So I don't really see that as any issue going forward since they solved the problem. All right, so now you have the S&P, back to the 3 minute, is down 25 points. The VIX is heading up. The VIX has been heading up pretty much since the market opened here, and we're up to a VIX number of 21.5. NASDAQ is down, or I'm sorry, this is the S&P 500 right here. So S&P 500 is down 25. You have the NASDAQ now down 125, and starting to approach my line. This is on a 3 minute, breaking through the 50 period average a little bit, but bouncing back up from it just a little. And then you have the Dow now down 77. So be very, very careful. If you're scalping trades, looking for a couple dollars here and there, that might be your best effort or option today, because there's just a lot of risk in what's going on. I talked to a couple people over the weekend, and a couple of things they said, well, what do I do with my 401k and mutual funds? If I think this dollar is going to continue to strengthen and go up, if I think yields are continue to go up on the 10-year and the 30-year, and I think inflation is going to go up, and I think the markets are going to go down, what can I do? Well, it's the same thing that I did with my U.S. oil. You can do the same thing with your mutual funds. But again, this isn't advice. So if I had a mutual fund, and let's say I was bearish on a market, which I am right now for the first time in my life, basically, and I wanted to, let's say this was a mutual fund of U.S. oil, and I'm up here, and it already hit the top, and it started to come down a little bit, but I think it's going to come back down to its 50 and 200-day moving average. So I think it's going to go from 41 down to 31, okay, 32, okay. So if I think that that's going to go down, and I did this over the last year in March, and when I did it with Boeing, but that could be a 20% decline. So let's say the S&P 500 is going to go down 20%. May or may not happen. Hopefully it won't be that bad. But I could easily see 10% coming into play across all three: the Dow, the S&P, and the NASDAQ. So if the S&P, get back up here, if the S&P drops that 7% down to this level, and this is daily charts here, what if it keeps going down? Well, you could exit. I could exit my stock mutual funds, and I can go find the most conservative mutual fund within that basket. This is in like retirement accounts, 401k, IRA, so you don't have any tax implications. Consult your tax advisor. I'm not one. This is just education and entertainment. But what I could do in my own account is I could sell that mutual fund, and you get the pricing at the close. So you can't do anything about any market downturn today. It's already priced in because you get the net asset value. Mutual fund prices are determined at the close of each market day. So if you were to sell something today and buy something else in your 401k and mutual funds, you could find a fund that either is a money market mutual fund or a treasury mutual fund only that pays 2% a year, and you can park it for a little bit. And if that protects you from if that protects me from a 10% greater downfall, then I could pick another day and buy back in. I would not stop any of my contributions if I was contributing right now, because my contributions are going to average as the market goes down. It will continue buying new stuff at a lower price each time. You're averaging down, yes, because you don't know what's going to turn and go back up. And by the way, I could be 100% wrong. S&P could turn around today, and it can take this consolidation phase that it's starting to enter into right now, below its 50, below its 200 period 30-second average there, and it's 180, and it could turn around and break another record today and go back to where it was on it could go back to where it ended on Friday, right up there at the 3978.20, whatever it ended at on Friday. So if it does that and it turns around and goes back north, I don't know. It worries me about the sales that you had. This is very, very concerning to me, along with everything else. If you're searching for good news in the market, the stimulus ain't it. Because the other thing you have that's happening Wednesday is President Biden is going to be releasing his infrastructure plan. His infrastructure plan is also going to include higher taxes on capital gains. And if they increase the capital gains tax again, after Trump lowered it to stimulate the economy, which worked, if they do that, that's going to be a concern for people. That could potentially cause the markets to go down. So if you have a new tax plan coming into play where they want to raise our taxes, if you have Goldman Sachs and having margin calls with other hedge funds and having that hedge fund go to Goldman and Morgan Stanley and Credit Suisse and say, hey, we got a mortgage call. It was a forced liquidation. Allegedly, it was forced. Are they the only one? If one fund is out there that got caught, how many other ones got caught? We'll see. But along with that, you have the dollar going up and you have yields going up. And so, in my opinion, now that the NASDAQ is down 122, not really forming any. Let me go to a 5-minute chart here. And let's take a look at where we started the day. We started the day up here. You know, steady decline on a 5-minute chart on the NASDAQ as we're down 129. And pretty much at its, almost at its low of the day here. Bouncing just a little bit, bouncing back up just a little. But again, the VIX, the volatility index, continues to rise now, but still at 21.5. So looking at the VIX, and here's the thing with the oops, go back up here. Come here. There it is. This is volatility for the S&P 500. So if you look at this on a daily chart, and you extrapolate this all the way back to March, you know, before that we're right about 20 or so. And every time we bounce in, we've been bouncing this 20.3, 19.5, 19.7. You know, this is sentiment. This is fear and greed driving this index. And so if the VIX, if the volatility over the last year is down 62%, but we've increased volatility by 13% over the last week in the S&P 500 index. So the volatility is increasing. So this is why you're going to see some of this stuff going on. And that's why we had a wild swing on, you know, on Friday. It was just a big time swing. So as you look at this and say, you know, it's trading above its 50 period average. Let's go to a 3-minute chart here. And it's above its above its 50 period 3-minute average. It's above its 180 period 3-minute average. If it's above its 200 period moving average. That volatility since the while you're looking at that's just today. If you look at, go out to 1 hour here, it bottomed on the 26th. It's been going up. It went from 18.7 up to 21.5. So 18.7 divided into 21.5. That is a 13%. Yeah, that is a 13% swing in volatility to the negative. 13% swing in less than a week. So that could be why that could be the other reason why all these are all just, they're just catalysts, one after the other. Inflation, gas prices, food prices, they're going up, folks. I got news for you. If you haven't noticed it, start looking because you'll see it. Hey, Knight, good morning over there on Twitch. Nice to see you this morning. Welcome to the bear market. Sorry, bad joke, I know. But the Dow is down 133, NASDAQ down 123, S&P down 27. So again, inflation, gas prices going up, food prices going up, a rising dollar. Okay, a rising dollar, 1 hour chart, rising 10-year treasury, rising 30-year treasury, and the Fed says they're not going to do anything about inflation even if it shows up. Remember the last time they said they expect GDP at what, was it 6.4% or 4.6%? I forget, whatever it was. But the last time they came out with GDP, they already revised it, and they said they were wrong by 13%. So the number that they reported was revised downward. And so what it says is they go back in GDP revision. They come out with GDP and they say, oh, yep, everything's fantastic. Everything is absolutely wonderful. And, everything is good to go. Let's see here. Search by period. That's not what I want. I want the latest news. Italy. Here we go. All right. This is ABC 4 days ago. And this is the games that they play. And this is absolutely a game. Government revises fourth quarter GDP up slightly to 4.3%. Okay, so look at the spin on this. Revises fourth quarter GDP up slightly to 4.3. U.S. economy growing annually at 4.3% in the final 3 months. They estimated it that it was going to be 4.1. For the whole year, GDP shrank by 3.5%, the largest annual decline since a plunge of 11.6% in 1946 when U.S. demobilized after World War II. So they'll come out and they'll reiterate and they'll revise things after the fact that never gets picked up on the wires. So again, continuing down, NASDAQ bouncing back just a little bit. 3-minute chart. Okay. Just a little bit. Looks like it bounced off of the 180 here. Didn't get down to the 200 period average on a 3-minute chart. So it's down now only 97. Dow is down 77. S&P down 20. And let's take a look at our meme stocks here. AMC is now up 13 cents, or now 18 cents now, to 1042. 30-second chart. And let's get rid of the externals. So now we're no longer looking at, this is the start of today, 29th. This is Friday. Got all the way up to 1976 on Friday. Or this morning, sorry. 1076 this morning. Now it's down to 1041. So, but up 15 cents on the day. GameStop up $1.89. And we'll see for, let me take a look at where all the juice is for options this week. Go to GME. Or no, let's check AMC first. I look at options. So all the options this week do not expire on Friday because the markets are closed. They expire on Thursday, April 1st. So Thursday, April 1st is options expiration. Let me go to my basic view here. Oops. I'm looking at the open interest. Close this off here. And hide that. There we go. All right. You have quite a bit at 11, 15,000 contracts open interest. That you've had 7,000 contracts, 7,100 contracts volume today at $11 on AMC. Again, AMC trades on the 50-cent increments, where GameStop trades on the $5 increments. 1,700 volume of $10 call options expiring. 9,300 shares open, or 9,300 contracts open interest from Friday. And so the biggest one is going to be the $11 one. 15,000 open interest and 7,100 contracts volume traded today, and that's on AMC. That's on the calls side. So now let's take a look at GameStop. There we go. A little delay here. So again, with GameStop, those trade on the $5 increments. Looks like most of them are back to the 200 range again. But only 2,000 contracts open interest at 200. And it's had volume today of 2,000 contracts. So again, these are all expire on April 1st. So if you had open interest Friday at close, 2,083 contracts of calls for GameStop at $200 strike price, expiring this Thursday. 2,074 contracts have already volume changed hands today. And so that's the biggest one. The next one down from that is the 210s. 210s had 1,100 contracts open interest. It's traded 272 today. And then you've got like 300, 195, 800 at 190 open interest, 500 at 180, 740 or 746 at 180, 368 at 175. So not a lot going on there. You won't see the battle, but again, the things that you have going on is you have Thursday, you have the OPEC meeting. on the 1st. You have Biden's tax plan, tax increase plan. They're going to call it infrastructure. Just read that as a tax increase on capital gains, and we'll see what else he says. And then you have other Fed governors, presidents of their local boards there making speeches this week. So still have the Dow down 105. Oh, here we go. Would now be, here's a question from some guy, Turnpike Jim, over on YouTube. Would now be a good time to go long chicken futures? Local supply of birds is scarce at best. Good luck with this new endeavor. We wish you the best. Thanks, Turnpike. So that's awesome. That's an awesome good morning. All right, so yeah, chicken futures getting scarce. So that's somebody that I actually know, and chickens are big. I'm looking into possibly getting some chickens once I move. So it might be I might build a chicken coop, and I know who I can go to for some advice on that. So right now we've got the Dow down 103. We've got the S&P down 22. And we've got the NASDAQ coming back a little bit, but still down 93. And again, your VIX and your S&P is starting to want to consolidate a little bit, but the VIX is down just a little bit from 21.5. Or did it get up to 21.6? Let's see the VIX. Yep, it did. It hit 21.6 a couple times already. Dropped to 21.2, 21.1. But it opened up down big time. So it opened up. Well, it was already open, but yeah, you're at 20.3, bottomed out at 20.2, and so we're 1 point ahead of its bottom in a steadily rising VIX. So volatility is definitely up. So looking at some shorts or some, if you're positive, the QQQs, those are down $1.45. The SH, which is it was one of the ProShares S&P 500 shorts. That's a short fund, so if the market goes down, that will go up. And the SQQs are up 20 cents. So there you go. All right, I'll be back in 1 second. Let me go close the door here. All right. Come back to the memes for a second. So Ford. Now Ford has been up quite a bit, and great company. Again, I own shares of Ford. I also have some call options out to April 16th actually, and it's been on a huge run. It's been jumping up since March. Or actually, if we go back to the daily here, since its bottom last March, it's had nothing but a steady decline. So if you take what happened in December on the down, and then you picked up some more, let's say the 5th of January, it's up 46% from there. Again, I took a nice test drive of the Mustang Mach-E, loved it, absolutely loved it. And if you're a shareholder, if you own at least 100 shares of Ford, you can go to their investor relations on their site and read about this if you like to buy Fords. But if you own 100 shares of Ford, you can get what's called the Ford Family and Friends X discount on a new purchase of a vehicle, where they have to show you the dealer invoice. After you log into Ford's site, you send them proof that you've owned at least 100 shares for 6 months. They send you back a PIN that is good for 12 months that allows this discount subject to dealer participation. So you would figure that out as if you have a favorite dealer that you like on a Ford and you're looking to buy a new Ford, you can get a nice discount on a new price, which means you don't have to go in there and barter and negotiate and sit in there for 4 hours and argue with them. But you can call the dealer, ask for a sales manager, or ask for the finance person or somebody, and find out, hey, do you offer the shareholder Friends and Family X plan? And so you can look that up. For example, you can just type in Ford Friends Shareholder discount. And it's called the X plan. There you go. So what it does, stock shareholder, how do I know where? Let me find out here where it's at. I know it's in here somewhere. Do shareholders qualify for vehicle discounts? Oh, that's hard to read. iChart. Okay, what it says is Ford Motor Company offers the Friends and Neighbors pricing discount to our qualifying shareholders. To be eligible, you must show you are a current Ford Motor Company shareholder who has held a minimum of 100 shares of Ford Motor Company stock for at least the past 6 months. We call this discount the Shareholder X Plan Program. There's an application for it, or you can give them a call and you can ask them about it and say, hey, I own shares, what do I have to do? The sum of it is that you have to send them proof that you've owned Ford, like a copy of your brokerage statement showing that you've owned it for the last 6 months, and then they in turn will send you back a PIN code that allows you to use it for 12 months. So this will pull up the actual document, and it talks about, you know, selecting a vehicle. It will talk about which ones are not included in the vehicle. Where's that at here? Let me see here. I think it was. So this is where you get the most update one. So all Ford Motor Company and Lincoln Motor Company vehicles are generally eligible with the exception Bronco 2-door, 4-door, F-150 Raptor, but a basic 150 would be fine, like a Lariat or something, or Platinum even. F-450 and F-550 chassis cabs. It says and others. So exclusions are subject to change. Please verify eligibility with your local dealer. So if one dealer says no, call another dealer and see if they include it or not. And you can get this through participating. It's voluntary. You should inform the dealer of X-Plan eligibility during your first contact with your dealer. If for some reason, this is Ford, the company, telling you this, if for some reason your dealer elects not to participate, you may visit another dealer. Can I purchase or lease my vehicle? Yes, either form of obtaining a vehicle is valid. Am I eligible for other incentives, like if they have rebates later this year or something? Yes, for the most part. Partner recognition participants are eligible for most public incentives. So if they have any type of rebates and stuff like that, you should be eligible for those as well. And again, the PIN that you get from them is good for 12 months. As a shareholder, you fill out this form and then send the completed form along with your proof of Ford stock ownership for at least the past 6 months to this here. You can email it to them. So you can email all this information to them to axzfaxes@ford.com, or you can mail it to their P.O. box. Either way. And so if you want to buy a Ford, you can do that. I only looked at Ford. I believe that, you know, there's probably a good chance that other manufacturers might do the same, and they might offer those discounts as well. So you can check with a local dealer or something like that to take a look at that. Okay. All right. Dow starting to head south again. I'm going to go into the 3-minute here. Okay. 3-minute chart on the Dow, down 127. We have the S&P down 25. And the NASDAQ is back down 112. We do have the S&P again. We're getting close to lunchtime on the East Coast. Lunchtime we call 11 o'clock lunchtime, 10 o'clock Central. And so we're getting into this consolidation phase a little bit here. And that's not necessarily a bad thing. But we'll see. Let me see if there's any other, let's see here, breaking news. All right. The container ship blocking the Suez Canal, this just came out 2 minutes ago, is now fully dislodged. Salvage firm. Here, let's see here. Let me pull this up. Show you all what's going on here. Make sure our balances are hidden. Yes, they are. Go over a couple news stories here. Okay. All right. Okay. So giant container ship blocking the crucial waterway of the Suez Canal has been fully dislodged. Panamanian vessel Ever Given jammed diagonally across Southern for nearly a week. We know that. Mascalis, the Dutch salvage firm hired to dislodge the ship, confirmed a successful operation. and restoring 80% of the vessel's direction. So that was earlier. So there we go. So that's good. Traffic in Suez Canal. There you go. Shipping traffic in Suez Canal resumes after container ship free. At least 369 vessels waiting to transit. Okay, so that's somewhat good news there. Air France is looking to do some refinancing of some contracts. Let's see the top news here. Oops, it jumped another story, so I missed the click. There we go. Okay, top news again. The ship is free. Nomura Credit Suisse warn of big losses after Archegos share dump. Same thing with Goldman. Exclusive Visa moves to allow payment settlements using cryptocurrency. That's big news. U.S. stocks, banks lead Wall Street lower on hedge fund default concerns. So interesting. So let me read that again. Okay. U.S. stocks, banks lead Wall Street lower on hedge fund default concerns. Not hedge fund default concern, but the plural use of the word concerns. And again, it's I don't believe that it's potentially only one hedge fund that's in trouble here and is going to be getting margin calls. There's probably a pretty good chance that there might be some other ones. Will we hear of other ones later this week? Who's to say? More protesting in Myanmar. Let's see here. CEO pay irks investors. Okay, other stuff there. Okay, that's it. That's it for news. So, you know, again, when we look at this and when I did my DD over the weekend and I looked at what was going to happen on Monday, I may start a Sunday stream with an update. We'll see. We'll see next weekend how I feel about that. But as it stands now, I stream twice a day, and from 9 to 11:30 Eastern, and then from 2:30 to 4 o'clock Eastern, or 11:30 to 1 o'clock Pacific time for the markets. And we'll get the market closed. So we'll be back here this afternoon as well. I'm still here for a little while though today. All right. So again, we've got the Nasdaq Composite now down 124, the S&P now down 26, and the Dow down 134 and slipping further. Let's look at Boeing, and they were up $7. What were they up? $7 last time I looked at it. So look at that. Even they're pulling back. So you know, buying the rumor. Sold. Now you got the traders that ran that thing up, 3-4%. Now it's coming back down a little bit. So now you got the Dow coming back down. You know, this was a huge push on that Southwest 100 Boeing MAX order that was announced at 4 o'clock this morning, Pacific time. So 7 o'clock Eastern. So they're pulling back. Ford is down 16 cents. AMD down 31 cents. Apple up 64 cents. Look at the S&P map. Little change of green. Apple now up. Some of the drug sector, healthcare stuff is up. The healthcare plans. If you look at CVS, CVS is up 0.75%. Anthem is up a little bit. Humana is up a little bit. Cigna up a little bit. United Healthcare up a little bit. But you got the drug sector down a little bit. Okay. You have all the banks down. So now they're calling all their buddies. And they're calling their buddies to find out not what happened. They don't care about what happened. Nobody cares anymore on Wall Street about $30 billion being sold out of equities for one hedge fund last week. They don't care about that. They're past that already. What they care about is, and the questions that they're most likely asking, that I would be asking, would be who's next? Who's next? You got to get. Can you give me a heads up if you hear something, or what are you hearing? Or the guys head to the bathroom and instead of going, they're on the 30th floor, but the hedge fund guys are on the 36th floor. So when they got to go to the bathroom, they don't go to the bathroom on the 35th floor. They go up one floor, meet their buddy in the bathroom on the 36th floor, and say, "Who's next? What's going on?" If you're naive enough to think that doesn't happen, enough on that. So you got broad declines across the board. You've got selected stuff. And again, if you're looking for things, you can possibly look back at the beginning of 2009 and look at what stocks did well when the Biden administration, or not the Biden administration, but when the Obama administration started. And you can say, okay, banks, financials usually do pretty well. Okay, energy usually does well. Value type companies still do well. Look at companies that will do well in a down type market. And you can find selections of companies that will continue to do well. You know, will Netflix do well? Well, Disney's down a little bit. Netflix is up today on that. You got the Paramount coming out with streaming. Everybody's coming out with their own streaming. So it's what they're going to hold back from the other streaming services, like, well, Netflix, because Disney, let's say Warner Brothers and everybody else starts doing their own streaming, Paramount, will that not allow Netflix to have those movies on their platform, or they'll be delayed by a month or something of that nature? You know, those are things that I look at. All your tech sector, with the exception of NVIDIA, up pennies, is down on the day. So now Boeing is now up only 440. So it's like I said, it's pulled back about 2% off of its high on the day. Okay. So Dow down now 150. VIX is heading up. S&P starting to head back down. Dow's down, Dow down 150. NASDAQ down 130 now, and the S&P down 27. I let fresh air in here and had the door open, and now I'm cold. So here's a Dow on a 3-minute chart. Steady decline since about an hour or so ago. And my music stopped. Hey, music, come back over here. There we go. And let me take a quick look here. I'm short the market both in the S&P and the NASDAQ 100 is what I'm short in the market right now.
1, 2, 3, let's go.
Three-minute chart, steady decline since about an hour. Close that up. There we go. So we've got the Dow down 141. Might be getting a little bit of a bounce here, but again, it's already dipped below its 50-period average on a 3-minute chart. Any buys and sells I do on a 3-minute chart from my own personal thing. So don't do what I do, not financial advice, not tax advice. If you do anything that I talk about on this channel, you will lose 100% of your money. I'm not a licensed professional. Go get your advice from someone else, but you can enjoy the journey as I'm still here. So what I look at is, let's say that I wanted to go, let's say I like the S&P. It's dropped, and I think it's going to go back up, and you know, Crypto Sonar, you're crazy. You don't know what you're talking about. You don't know what you're doing. You're going to lose all your money. Okay, could happen. All right, this is a 3-minute chart. The green is a 50-period moving average. So each candle represents 3 minutes of time. Okay, so you have over here 6:30 Pacific time, 6:30 in the morning. Market opens. The green line represents 53-minute periods of a moving average. So the average of pricing over 53-minute periods. The white line, I do what's called front run. This is a 180-period average. There, it just moved another candle. And then the time declines over here. So you got another minute over here for it to adjust. And the red is the 200. So if I was going to buy the SPY right now, I would look at this and say, okay, I'm not on a buy signal. I'm not operating on a sell signal. On a 30-second, I bet I am. But I don't use my buy-sell signal indicators here. I look at pivots, but I don't ignore everything on a 30-second chart. Don't look at anything on a 3-second chart and do anything. Don't do anything on my charts. They're just charts, okay? Make your own decisions. However, it's below all these. It's still above. So it says if it comes down, it should come back down to the mean. It should come back down to this 180. It didn't reach the 180, which it went back up. So now it's starting to head back down towards this line. Now, so we'll come back down and we'll start to head up again. That's still to be determined. But our volume, our problem is we've had buys The sell volume does not equal the buy volume, so that's good news. So what that means, well, that's from, if you're looking at from Friday. But today, the sell volume has exceeded the buy volume, okay? So if I move this down, or actually, let's leave it there. If you see these red boxes here, that's your sell volume, and it's exceeded the buy volume on the day, with the exception of the first half hour. So with the exception of the first half hour, which I discount, that's all the volatility is in that time. So you have all these sells up to that point, and that's why we're still going down. This down here is your moving average convergence divergence, okay? Basically, in the most basic form, if the red is above the blue, it's bearish, the market's going down. If it crosses over, then you have a MACD crossover. So here you had a rise in the MACD, and then it crossed over here, gave a sell indicator, and then headed further south with a difference. And then this is volume, buying and selling volume. So the selling volume is slightly decreasing. Now it's increasing again. And we're not in an overbought or oversold condition. When this blue line here down at the bottom is above this dotted line up here, we're in an overbought condition. If it dips below, you're in an oversold condition, but it can also mean that decline may continue. So this blue line would need to be here for me to buy. My blue would need to be above my red. I'll look at the volume. I'll look at the 3 averages. I'll jump over to my other monitor. I'll look at what the S&P is doing. I'll look at the volatility. Then I'll go to my account and possibly make a trade. And so there's different things that you can do and look at what you're going to do to confirm things. But, you know, I wouldn't be buying the SPY at this point. You have the 10-year Treasury, which is still up on the day. Look at that incline. You have the 30-year going up. You have the dollar going up further. Look at that thing, up to 92,919 now. This is the 1 hour chart. Yep, that is a new high. That is a new high since the last time the dollar hit 92,925 was, well, on a daily. Last week a little bit, but on a pretty good upswing there on the dollar. And that's why you have the Dow Jones Industrial Average now down 124 on the day. Go back to a 30-second chart. You have the NASDAQ now down 145. And look, came all the way back down to the line that I drew, almost down to the line that I drew all the way back on the 24th of March is when I did my DD. And I extended this line out, and what I said at that time on that day is that the S&P had formed a new support level through here. So this is resistance. This would be support. If it breaks this line, its next level down, you might be looking here, 1289 or 12,891, so about another 100 points or so, or possibly down even further. So that's on the NASDAQ, okay? S&P, looking to break as well, okay? And then the Dow is down. So the S&P is down 27. Your NASDAQ is now down 147. A rising dollar, rising 10-year, rising 30-year, rising inflation, and your Dow is now down. Heat map, getting duller. Dull colors, this is the S&P 500. 500 of the biggest companies in the U.S. You've got Tesla down over here. Green is good. Green is up. Bright green is up quite a bit. Like Facebook is up 1.95%. Google is down. Microsoft is down. Oracle is up 2% today. So bright green, things going up. Boeing, 2%. Red is down. Red dull is down, but not as much. Green dull is up, not as much. Banks are getting hammered. They're all trying to figure out which hedge fund is next to go belly up and get margin called, which could cause another sell-off. The problem, here's the problem. there's no transparency in the market. So Goldman Sachs, Credit Suisse, Morgan Stanley did all these trades, and they did it away from the market, which means that they called their buddies up and said, hey, can you get your investors that are stupid enough to buy Viacom? And this is what they did. These are the people that got screwed last week. So you want to talk about saving a hedge fund or having a hedge fund get a margin call? Come on. There we go. Viacom. Look at Viacom last week. And let's go to a 1 hour chart here. And somebody at Morgan, somebody at Credit Suisse got to their retail arm, got to their brokerages, or got to their bigger managers and said, hey, call your pension fund and yeah, we need to dump $3 billion of Viacom CBS. Can you get them to buy some shares? Sure. We can get them to buy at 100. We can get them to buy at 90. We can get them to buy at 78. We can get them to buy at 65. We can get them to buy at 50. We can get them to buy at 45. Some poor hedge fund or some poor pension fund or some poor retail investor bought Viacom on the 23rd of March. On the 23rd of March, they bought Viacom last Tuesday at $100.42. Right there. And now they're down 55%. But hey, I'm glad Goldman and Morgan Stanley were able to make those trades away from the market and not disclose to us what was going on. They do this stuff behind our backs. That's what they're doing. That's how they do this stuff, is they do it behind the backs of others. And they suckered people into buying this thing all the way down so they could dump their shares because the hedge fund got margin called. So that's their buddies helping each other out, screwing everybody else. So hopefully you didn't buy Viacom last week. Hopefully you didn't buy Discovery Networks last week. That was another one that got hit. Same chart. It's the same chart. It's the exact same chart. Why? Because this hedge fund got margin called. And so as they dumped all this, it was done away from the market, which means it wasn't disclosed, but the price did decline. Look at these volume things on the 26th on Friday. But look what happened here during that week. So you had the S&P going up the entire, if you look at the S&P, let's look at it from last week, okay? 23rd, it went down a little bit, then it went up big time the 25th and the 26th. So it went up big time the 25th, 26th. Discovery went down, and then Friday got hammered. So they knew what they were doing all the way back here. They knew what they were doing. And Viacom CBS, same exact chart, same exact scheme. It's what they do, and they trade away from the market, which means they do it over the counter, which means they call their pension fund, say, hey, would you be willing to take 1 million shares of Viacom? Oh yeah, they're streaming. It's great. Yeah, what's my price? Well, it was at 100. I can get it for you for 85. 85? Well, that's below the 50-day moving average. Yeah, I'll take that trade. Boom. He takes the trade. Boom. The rest of the market starts to figure it out because they call their buddies, and then the buddies, hey, Joe, hey, I think we need to get out of Viacom, like now. Okay, whatever you think, Joe. Whatever you think, George. And then the retail side, the brokers, that knew about this, started to tell others, but there were no stories. Where was the story last week on Viacom? Let's go back to last week. There's a halt on volatility because Viacom had $2.65 billion dual offering of stock convertible. They had problems with their issuance of shares of stock and bonds last week. They had a problem with that. Okay, that caused it initially to go down, but then the question I have is, who's the next hedge fund? Who's the next group, and why is the dollar going up so much today? Why is the treasury yields going up today? Why is the Dow going down? Why is the S&P going down? Why is the NASDAQ going down? And if you believe that the smart money is already possibly looking in this and saying, yeah, might be time to maybe take some profits, but do what's best for you. If you've got, if you own Tesla and you bought Tesla at where's my Tesla? What happened to my Tesla? What the heck? Where's my chart? Hold on a second. There it is. If you bought Tesla at $300 or $400 and you have it on the taxable side, I'm not saying that you got to go out and sell your Tesla, or that I would sell Tesla if I had a $300 right now. But if I had tax implications, I might consider holding it, or possibly writing an option to cover, like what's called a covered call, to protect my shares to further downside. Get some premium and basically hedge by writing a covered call. So if I had Tesla, so let's look at the let me look at an options chain here. And let me take a look at Tesla. Oops, TSLA. And let's say, for example, and I do not own any Tesla shares right now, nor do I plan on buying any Tesla shares. So let's look at the options chain on Tesla. And let's go out anywhere from up to like 45 days. So here's 33 days, April 30th. So let's look at the calls, and let's say that, you know what? I've got Tesla at 400. It's currently trading at $601. If I was going to sell my Tesla in the next 35 days, what price would I be willing to accept for it, no matter what happens? And I say, okay, $705 a share. Okay. So I'm going to go into this, and I'm going to look at, and I'm going to go to my theoretical on options. I'm looking at the April 30 options. Okay. And I'm going to look at my delta, and I've got a delta right here at 26.46. That's actually pretty good. So for that, here's what would happen. If I wrote a covered call, which means I sold a call on Tesla for expiration April 30th at $705, it says, I'm willing to sell my shares at $705. Somebody's going to pay me, at the ask, $19.10 a share. So $19.10, oh, I only own 100 shares now. So they're going to pay me $1,910 right now, today, and I'm going to sell them the option to buy Tesla at 705. Okay, so I'm going to collect premium on that. So my hope is that Tesla does not go above 705. But even if it goes above 705, it just means you're capping your profit, because you're going to get your profit from where the price is at right now, 598.63 up to 705. You're going to get that. You're going to get that profit. So with a low delta of 0.26, it says there's only a 26% chance of Tesla reaching 705 on April 30th. So if I owned 100 shares of Tesla right now, that might be a trade I might look at taking. I'll take the premium. If it sells me out at 705, great, hallelujah. I made another $105 on Tesla in 35 days. If I'm wrong and Tesla goes down, or if I'm right and Tesla goes down, or Tesla doesn't hit 705, I collected $1,900 in premium as a hedge. It's called writing a covered call. Maybe I'll do a video on that. I don't know if that's a little bit more complicated than y'all are used to hearing or talking about. But that could be something you could do, and you can look at that with really any stock. Like, if you talk about rules and stuff. Let's see here. You want a stock that isn't going to shoot up. I don't fall in love with any stock. I sold my Tesla the last time at 663. I don't love the company. I'm about my retirement and making money. So I'm not gonna lay down with a stock and say, no, I sold my US Oil. I sold a bunch of shares of my Ford. I want to buy them back when this is settled. Okay. I want a strike price in the option on the covered call that's above my cost basis. In other words, if your cost basis on Tesla is $650 right now and you're at a loss, you don't want to write a covered call for $640. you want to write it for a strike price that is above what your cost basis is, because you're going to have tax implications. Again, I'm not a tax advisor. This is not financial advice. I'm not a licensed financial advisor. This is strictly for education and entertainment. Consult a professional before you do any trades. Okay. You want a delta of a 0.3 or lower. Well, here we have the 705 delta on the Tesla 705 calls that expire on April 30th, about 35 days, at 26.73. My hope is that that covered call expires worthless. So I might hold that to expiration. There's other techniques you can do, because what's going to happen is up through expiration, you're going to have that theta is just going to be in the gap. Everything's just going to go south quickly. And you want an expiration less than 45 days. There you go. The premium is irrelevant. This number is irrelevant. I will never write a covered call for myself and say, hey, it's all about taking in $1,900. It's not about that. It's about the delta of them take my 100 shares away, because one call option equals 100 shares. It's a price I'm willing to separate from my 100 shares. My hope is that it doesn't hit that price. The delta is the percentage chance that it will hit that price is at 26% right now. 26.6. So I'm looking for a delta. I did that without even looking at it. I haven't looked at Tesla. I don't own any Tesla right now, but I just hypothetically picked that, and it just turned out that the delta was less than 0.3. Great example. So that's what you can do. So if you own shares of a company and you've got tax implications on the taxable side, if you don't want to accrue those, but you want to hedge against it, you can write a covered call, but you've got to be comfortable with having those shares that you own called away. If you own 500 shares, you can sell up to 5 calls. And then those shares are going to be pledged by your broker as collateral. The income you get from the call goes right to your buying power. So you immediately get that as buying power, but your shares are basically locked unless you bought to close that call position. Then you can buy or sell the shares yourself. And those are more complicated strategies. The idea is a call option on shares you already own, held open through expiration in the hopes that you don't get exercised using a low delta. You don't want to do a delta. Look at these deltas as it gets lower. You've got a delta of at 605, you've got a delta of 53%. Don't do it. It's got to be a share price that you're willing to sell your own shares at. So in this particular example, if I own Tesla and I'm looking at the 705 strike price option for a covered call, the delta is at 0.2673. That meets my rule. I don't think the stock's going to go up to 700 in the next 35 days. That meets my rule. Let's say I bought it 400. It's above what I paid for it, so it's above my cost basis. The stock is at 600 right now. In the next 35 days, would I be willing to sell it at 705? If it was in a retirement account, heck yeah. But again, I don't own any Tesla. So 601 divided into 705, you're saying you're willing to sell that stock at a 15% additional gain between now and the next 35 days. But in the meantime, you're going to collect $1,930 premium for that one call option, because the premium price is $1,915 times 100 shares, because each call option is for 100 shares. So it's a way you can hedge against. You got to have a bearish view of the market. If you think the price is going to go down or it's not going to hit your 705, so what you're going to do is you're locking in your maximum loss and you're locking in your maximum gain. Now, what if the stock goes up to 725 and you're exercised away, and the guy says, yeah, I'm exercising the shares, give me your shares? What happens? Well, you sold to him at 705. So your break even is going to be the following. Your break even is going to be the 705 plus the premium you paid. Let's just call it 1930, 724.30. So up to 724.30, you're profitable on this covered call trade. Even if the stock goes up to 730, you lost. But at that point, who cares? You're already up 15%. You collected the premium. You hedged yourself, and you were able to take advantage of the market. So selling a call against your shares is called a covered call. You pick a strike price above your cost basis. You pick a delta at 0.3 or below. That's just my rule. You can do your own rules. This particular one that I guess on, it just happened to be a 0.26 delta. And if you want to learn the Greeks, maybe I'll do a YouTube on the Greeks. The gammas, the thetas, the vega. Vega is not a Greek though, okay? And the delta. And you can look at those and what those are, and they represent different things. You know, where the gamma represents a dollar change in the strike price percentage. How much will the premium move? You got the rho. Nobody cares about the rho. You got the theta, which is time and decay on the extrinsic value, and then you got the vegas. You got the vega as well. I may have a couple of those mixed up because I'm thinking about something else right now. So you have that going on, okay? But folks, look at this. I talk about this stuff, and again, I made a big post on Facebook yesterday, and I took a look at what I thought was going to happen today in the market, and unfortunately, I made the right call. I've been short the market since Wednesday the 17th, before the FOMC came out with their decision on rates. I've been short this market. So I'm sorry if you were on this channel before or during that time. You've heard me ad nauseum talking about this because I've lined all this up day in and day out multiple times to many, and I don't know, you know, don't tell me if you're listening to me or taking, you know, anything that I'm talking about, whether you're doing any trades or anything like that. But looking at this, you know, the Dow today is now, we're getting into lunchtime here. The Dow is down 120. The S&P is down 25. NASDAQ is now down 151. Okay. Your S&P 500 heat map. Watch this. We've been talking about covered calls for the last 10 minutes. Watch this thing go even duller, and some of the greens possibly go red. Watch this. It's going to happen quick within a second after I click on it. Boom. Not much left is positive on the day. Right? You've got a lot of red going on here. What normally happens in this market, now this is the serious talk, okay? I talked about this earlier. It's breaking below what I set as possible resistance levels. The NASDAQ already came below it once. It's below it right now, or it's slightly above it right now. What I thought was its most recent level, but it broke it. This is due diligence that I did on the 25th. If you look at the S&P, this is a 1 hour chart. It's got a little further ways to go on this one. And the Dow I didn't do one on because the Dow is just a Dow. It's 30 stocks. 30 boring dividend paying stocks. Like Rocket that I got $832 on and don't own the stock anymore, yet they paid me $800 on. Gotta love it. So with this decline right now, I'm up almost $7,000 today. I hope you're up. I hope you have stuff that's going up today. I know that many of you don't, or if you're watching this stream later in the day, today's going to hurt a little bit. If this holds, we may come back after lunch. I could be 100% wrong. Stock market go burr, everything goes up. It could happen. It happened Friday. So we'll see what happens. And I'll be taking a break here in a little bit here, but I'll be back in 3 hours. I'll be back at 11:30 Pacific, 2:30 Eastern time for the market close. So I'll be back for power hour. Okay. But you look at the VIX now. The VIX is coming down. The S&P is starting to recover just a little bit here. So is the Dow. So got a little bit of a bounce. Go to 30-second chart. Got a little bit of a bounce off the bottom here, which we hit right about 25 minutes ago at 8 o'clock. Okay. And same thing with the Dow. And same thing with the NASDAQ. About 20 point bump back to the positive side. So, but what you'll see is it goes up. It needs to break this 1303 or 13003, then it needs to break the 13021. Because every other time it's gone up today, it's gone down, retest, down. Lower highs and lower lows Now we'll see what happens right here, and we can watch this for a little bit here. And if you have any questions, feel free to post them below, or if what I'm talking about is helpful for you, or if it's stuff that you already knew about and know how to trade and know how to do it. So let's see. There's our 13,003 we just talked about. It just broke through that, so that's good news. Now that it broke through that, let's go to the S&P, because it's doing the same. It's got to get above 39.55. So it's got another couple dollars to go, but the VIX is heading down. S&P is starting to recover a little bit. That's good news, but we're still operating on an overall lower lows, lower highs, consolidation, but it's lunchtime, so your volumes are probably aren't going to be as great as well. Look at the volume. Let's look at the volume on the SPY. So volume is pretty consistent volume. You had sellers are still in control. Your buying volume that you see here, you have one wick up here, doesn't equal the sells. This could be day traders profiting too. So day traders are running up. So now you have all these people that have profit right now. If they bought these bottoms at this 392 level, let's say they got in over here, they're now up at the top. They're up, 0.25%, depending on dollars. Maybe they're taking that gain, 99 cents. Again, I can buy 1,000 shares of anything, and 19 cents or 38 cents gives me the gain I need for the day. So you'll see some profit taking. So anytime you have volatility, you got day traders basically buying and selling it, looking at fundamentals, and they're in a trade, 5 minutes, 10 minutes. That's it, and then they're out. So you have to think about that too. Let's see here, what else we got. All right. Go back over. Give me a second. Okay. So S&P 500 looks like it's hitting a little bit of resistance here, but it may be able to turn. We'll see. Yeah, Facebook, Oracle, Johnson & Johnson, Pfizer, Merck, Lilly, Bristol Myers, United Healthcare, Amgen, Gilead, Apple up, Visa up just a little, Berkshire Hathaway B up a little bit, Amazon up pennies, Facebook or Oracle up a couple percent. Oracle's up 2.5%. Facebook is up 1.85%. Walmart is up. Costco is up. Coca-Cola is up. Pepsi is up. Tesla down. Home Depot, Lowe's down. Starbucks, Nike down. McDonald's up. Energy down. ExxonMobil down. Chevron down. It wants to. It wants to go back up. Let's see what's happening with the treasuries. So treasuries coming back down, but again, it's hitting this old resistance line. That, again, 30-second chart. Take it with a grain of salt. If it can break through that, possibly, but it's still up on the day, and the dollar is still up 0.154 on the day as well, up to 92.891, but off of its high of 92.964. So that 92.964 compared to where it's at right now, 0.08%. So down 7.7 cents. NASDAQ, 135, down 136. Let's see what happens here. It looks like it wants to break these support level, again, 30-second charts from 7 o'clock to 7:30. That's where it's at right now, and where it hit it at 8. The question is, does it go back up from here and retest this range 13,030, or does it come back down and possibly look towards new lows again, breaking my line again? Slight turn on the S&P 500. All right. So it is now 8:31. And I think that that's going to do it for now. Okay. Be very careful trading today, folks. If you're scalping, stick to your rules. Let your rules dictate your trades as far as what you have set up, as far as your own buy and sells, and what you're willing to do. Don't play around with money you can't afford to lose. If you can't afford to lose it, then just leave it alone. But there's definitely some things you can do to look at offsetting some of the risk in the market right now. So with that, I think that's going to do it for right now. We'll be back in 3 hours. The Dow is now down less than 100, down 99. S&P is down 19. NASDAQ is down 131. We have AMC, which is up flat on the day, up a penny. GameStop just about 1% decline, down $2 a share. Palantir down to 21.73. Wait, what? I should set alerts on this one. But the last time I set alerts, it blew through my alert at 23 something. I said, nope, my rules don't apply. I ain't buying it. I'm glad I didn't. Now 21.50. I might in between. I might look at some Palantir. And for some Palantir, pivots at 22.40. So pivots at 22.40, up in this range. Support 1, it already broke through support 1 at 21.88. Support 2 level on the fib was 21.17. It got down to 21.50 today, so it didn't hit support 2. All right, we'll see. I might look at that while I'm gone. So, well, if I decide to do something, I'll let you know. If I go to a 3 minute on Palantir right now, I'm sure I'm on a buy. I am not. I'm still operating on a sell. No, it's carrying over from a buy. Let me go to regular candles, and there's my buy. Okay. So I usually use the Heikin-Ashi candles. This is just your regular candles. It's on a buy. Blue, slightly above the red, not in an overbought or oversold, but I've got them. The seller volume is greater than the buying volume. So that's a no for me right now. Darn it. But that's okay. That's why I have rules. So, trade by your own rules and look at that there. Listen, you guys have been awesome. Thanks a lot for tuning in. Again, we'll be back in 3 hours at 11:30, and we'll go from there and take a look at what the markets do. Be very careful this week. It's going to be a lot of volatility, a lot of up, a lot of down, a lot of sideways motions. You got OPEC meeting on Thursday. You have Biden and his tax increases coming out, also known as infrastructure plan, coming out on Wednesday. You have higher capital reserve requirements by the Fed that are due by March 31st. You got a major hedge fund basically get a huge margin call and almost go belly up over the weekend from trades they made on Friday. And where there's one, there's another. You have Bitcoin is up. Ethereum 775. Ethereum, I went up on my Ethereum percentage. I gotta look. My phone is restarting, but I'm looking pretty good on that. I bought that at 15. What did I get it at? 1588. 1588.1. So 1588.1 divided into 1775. This was last week, and I'm up 11%. Sweet. All right. We'll see y'all, Joseph. Thanks for tuning in. You can replay the stream if you want. There's a lot of good stuff I did in there today on research I did over the weekend about the markets and where I think they're going and what's already happening today, which is we are down across the board. The Dow is now down only 78, though. NASDAQ's 4, and the S&P is down 18. Thanks for tuning in. We'll be back in 3 hours on all 3 platforms, Twitch, YouTube, and Facebook. Thanks for tuning in, and we will see you then. Bye now.